Hi, I'm Michael Baez, a CPA who helps contractors by giving them the tools to understand their numbers and build a more profitable business. So today we will be talking about construction accounting, the basics of construction accounting and what it makes it different from regular accounting. So construction accounting builds on normal accounting to meet the unique needs of the industry. Standard accounting focuses on overall company finances, where construction accounting is all about the projects and it really zeroes in on how each job affects the company as a whole. The top three differences are going to be project accounting. So this is where all the income and the expenses directly related to the project. So say I'm building this house on Easy Street, all the income and expenses go to that project, Easy Street project, and they are specifically identified, and then they are all added to a project profitability report, which is similar to a profit and loss for that project. And what this does is it allows contractors to know how profitable they are on each project, and they can see if they're estimating correctly or if they need to raise the projected costs. And this is going to make or break your business. The second difference with construction accounting is going to be a report we call budgeted or estimated versus actual. So what this does is you take what you estimated the project costs were going to be and you compare that to what the actual costs are to tell you how well you estimated the project and where you are at in the project as far as percent completed. And that's also going to be a new accounting method we also use in construction that I'll cover later on. It is good to keep up with the estimated versus actual report because this is how you'll know if you're estimating correctly. And if you are estimating correctly, it eats into your profits. So this is very important to keep a profitable business. The third unique or different thing about construction accounting is the use of long-term or complex contracts. It's not a business where somebody comes in, they buy something, and they leave, and that's the transaction. When we're getting into contracts with people, we have change orders, we have retainage, progress payments. These construction projects can last more than a year. So to account for that, we need to do something a little different than normal accounting. That way we can truly know what's going on in the business. Another key difference in construction accounting is going to be the revenue recognition method. There's going to be a couple different ones that construction industry can use, and the IRS does make it mandatory to use one, but that's only if you are in a certain revenue bracket. I believe last time I checked, it was 29 million per year of gross receipts averaged over the last 3 years. So definitely on the bigger side. If you do meet that test, you do have to do percentage of completion method. So this is something unique to the construction industry. This is where revenue is recognized as work progresses and based on project milestones. You can't just buy all your material for the project and then expense it all when you buy it. You have to wait until you say have gotten 50% done with the project, then you can expense 50% of the estimated actual cost. Another method that is unique to the construction industry is the completed contract method. So this is where all the expenses and revenue don't go on the profit and loss while you're doing the project. It actually stays on your balance sheet. It's a little more technical. And whenever you do finish the contract, that's when you recognize all the revenue and the expenses. And then the third way to do it is just the cash method. That's how service-based businesses do it. It's how most businesses do it with the IRS, is just when you receive the money, that's when you claim it. Whenever you pay the money out, that's when you claim the expense. The last big thing in construction accounting is going to be the payroll. With payroll in construction, there is one huge difference, which is going to be prevailing wage laws and certified payroll. So this is if you end up getting government contracts, which have proven to be very nice for some of my clients. you will have to get into prevailing wage laws, or at least have somebody that could take care of that for you and that could do that certified payroll. So it's another layer of accounting that is unique to construction. And that was a brief overview of construction accounting. It is the same as regular accounting, but with a more disciplined and focused look at how to deal with construction's problems. If you are a contractor or owner of a construction business, understanding these basic principles are key to your company's success. And remember, from bits to bottom lines, we're with you every step of the way. I'll see you next time for more contractor tips.